Recently, the Japanese media have been saying how incredibly concerned they are that Thailand, in combination with China, are planning to take over a huge section of Japan's automotive industry. This is not coming from me, by the way, guys. This is coming from the Japanese media, who are now starting to see exactly what's been happening. I mean, looking at cars like Mazda, they are barely selling any cars now in Japan itself. And the automotive industry in Japan is actually shrinking. That means that Japan's economy, which relies upon its automotive industry more than anything else, and in fact, it is basically completely reliant upon its automotive industry for its national economy, it's in a bit of a crisis. And all of a sudden, the Japanese automakers, Toyota, Mazda, Nissan, Subaru, Honda, Mitsubishi, Suzuki, all of them are starting to think to themselves, this is not looking good. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Great to see you. Now, guys, I'll be at the Melbourne EV show in a few weeks on the 11th of August. If you can get tickets to the show for very, very cheap, actually, if you use my promotion code, I'll put the code in the description. And yeah, would love to see you there. I'll be after the show on the Saturday night. Grab you a meal. If any of you want to join me, you're very welcome to do so. Now, the China-led boom in Thailand. I'm talking BYD. I'm talking a bunch of different Chinese automakers who have now set up EV factories and are in the process of building EV factories in Thailand. That's what the Japanese government are very concerned about. They are actually now manufacturing so many different cars now. It's becoming this massive automotive hub. Thailand is. And that's why Tesla are actually considering building a factory there as well. So what happens is these Chinese automakers build these cars in right-hand drive and also left-hand drive, but predominantly in right-hand drive for right-hand drive car markets. And that's where Japanese automakers have an enormous market share. And now Japan's saying, are we going to lose this market share? And it's a good chance they will. Thailand's Siam Motors partnered with Nissan in 1962 with a factory that rolled out 4 cars a day, leading to a profitable decades-long relationship with Japanese companies that transformed it from a car dealer to an automotive pioneer. But the Thai family-owned group that has grown annual revenues to $7 billion on the back of that success has been looking outside of Japan. It's been looking to China. Siam Motors is in talks with several Chinese automakers about potential partnerships. They've already signed many partnerships, and some of those are particularly for high-end electric vehicles, electric pickup trucks, the kind of vehicles that sell incredibly well in right-hand drive markets, says Vice President Sebastian Dupuy in an interview referring to previously unreported discussions. Now, we know that there's already been several factories built. BYD, for example, have one in Thailand, and there's been numerous other car factories being built in Thailand right now. EVs will be a nice pocket of growth, he said. There is a market growing for that. We want to capture that growth. Now, a very subtle way of saying, we're going to take your market share. There's pretty much nothing you can do about it. Siam Motors' position reflects a rapid shift underway in Thailand, where Chinese investments worth billions of dollars since 2020, including by BYD and Great Wall Motors, have opened a new front in a market Japanese automakers have historically dominated. Across Southeast Asia, Toyota has around 20% market share. That's a lot. That means 1 in every 5 cars sold is a Toyota. That's about to change though. Close on the heels of a sales crisis in China for Japanese automakers are now facing a battle for another key Asian market because of what has been a go slow approach to EVs, according to registration data, industry officials and analysts. Now, the president of Toyota, he has been gloating, saying, look, I told you so. I got it right. You were all wrong. EVs are not going to grow as fast as what we thought. Now, that's an interesting position to take, considering Toyota's sales in China, which has historically been their largest market, have continued to shrink at a rapid pace. Toyota is becoming less and less relevant in China because of that reason. It has not taken EVs seriously. Now, they're risking doing the same thing in Southeast Asia. That includes places like Australia and even the UK, who often get cars from Thailand as well now. The Chinese wave is beginning to reshape Thailand's auto industry as EV makers from China bring in their suppliers and local Thai firms, including those with long-standing links to Japanese companies like Siam Motors, seek new partnerships with Chinese EV manufacturers. Because why? Well, because they see that as the future of the automotive industry. Thailand is Southeast Asia's largest car producer and exporter, and its second largest sales market after Indonesia. Japanese automakers are so dominant that for decades they have treated it as an extension of their home market. But China surpassed Japan as Thailand's top foreign investor last year. It's no coincidence that last year China also surpassed Japan and became the largest exporter of vehicles worldwide. This was boosted by BYD's investment in Thailand in a new plant that actually has begun making EVs this year, and concerted efforts by Thai officials to draw Chinese EV producers. In fact, Thai officials are currently in discussions with Tesla for a gigafactory in the country. Thailand's transition offers a test case for other economies as Chinese automakers ramp up exports and build overseas production hubs in places like Turkey, Northern Africa, Morocco, and also parts of Europe as well, in response to a hyper-competitive home market for electric cars. In Europe, for example, where policies to support local EV production are taking shape, Chinese automakers are making a major push in a market where EVs now account for 1/5 of all sales, or around 20%. So in the China versus Japan battle, it appears that China are winning. Bangkok President Pasit Chanta, guys, I can't pronounce his surname, I'm sorry, drove a Toyota Corolla for a decade and a half before switching to Great Wall's Aura Good Cat EV this year. Now, the Aura Good Cat EV is the cheapest electric car you can buy in Australia. I'll never go back to a combustion car ever again, said the president. Now, he's also a teacher and he drives part-time for a ride-hailing service. Of the nearly 850,000 new cars registered in Thailand last year, only 1% were EVs, according to government data. But between January and April this year, that proportion rose to more than 6%. In other words, EV sales have risen by more than 600% in Thailand. BYD is now the market leader, followed by China's SAIC, and Horizon and US automaker Tesla, according to registration data showing 18,500 EVs sold between January and April. Now keep in mind, the Australian car market is even bigger than the Thai car market, and that is where Australia gets a very large percentage of their cars right now, Thailand. More than 7,300 of the EVs sold so far this year in Thailand were BYDs. They hold the real lion's share of the market, and that's growing quickly. Only 11 newly registered EVs came from Toyota. Only 11. So for the entire first 6 months of this year, Toyota sold 11 electric cars. It's ridiculous. So Toyota has historically been Thailand's dominant brand that, along with its partner Isuzu and Honda, have accounted for 70% of car and truck sales in the country. 70%. Now, as you can imagine, that figure is drastically changing. The head of Nomura Research Institute in Thailand says Chinese brands could take at least 15 percentage points of share from Japan over the next decade by delivering affordable EVs, but that could be a massive understatement. I suspect it is. He said the Japanese are only able to target some of the premium segments. Toyota, which alongside its group companies has invested nearly $7 billion in Thailand over the past 10 years and employs 275,000 people, said in a statement it is considering EV production in the country, but nothing's about to happen anytime soon. Toyota said it has taken 3,356 bookings so far for the electric bZ4X, which it began selling in Thailand last year. Now, I'm curious to know, if it's taken 3,356 bookings, why has only 11 been delivered? Now, Toyota also signaled an electric pickup truck is coming, eventually, at some point. But Goldman Sachs said in a note last month that there is growing need for them immediately to consider other product segment expansion, which they're clearly not doing. By 2030, Thailand aims to convert at least 30% of its annual production of 2.5 million vehicles every year into EVs, with ambitions to become the main production hub for which is aggressively pursuing investment from Chinese automakers and others. Thailand's pitch to Chinese EV makers has been its existing supply base, built largely for Japanese automakers, and readiness to provide incentives. These include lower tariffs on imports on the condition of subsequent local assembly and some tax breaks for EV manufacturing. We realize that if we would like to be the EV hub of the region, we cannot only build the car assembly industry, said Thailand's Board of Investment Secretary General, who has traveled many times to China to see what is going on, basically to view the future of the automotive industry. We need to strengthen the whole ecosystem of EVs. And really, that's what Thailand aims to do. It aims to take market share away from Japan in combination with China. Now, you can guess that Thailand has seen the writing on the wall. They know the future of the automotive industry is not Japanese automakers. Sure, they'll play a part, but that part will continue to shrink every single year. So Thailand is seeing this writing on the wall, and they're pivoting away from the Japanese automotive industry to the Chinese. The BOI has approved 14 projects by 13 companies representing an annual production of 300,000 EVs as of the 31st of May. Great Wall selected Thailand as a regional hub for EVs because of the country's strong infrastructure, supplier and talent base alongside its growth potential, said the managing director of the Thailand arm. You want to penetrate into a market that has purchasing power and will be able to support your growth plans in the future, especially in a new business like electric vehicles, he said. Now, this story has been shared by numerous media in Japan. It's even been on the Japanese television, where they're saying they're very concerned now that Chinese automakers will basically set up all these factories in Thailand and take a lot of the Southeast Asian car market, including Australia and New Zealand, even the UK, even also potentially South Africa, countries where people are buying right-hand drive cars. Now, that's a pretty big segment of the market. We're talking millions and millions of cars every single year. So the Chinese are not only targeting Japanese automakers in China and in Japan and in Thailand, they're also doing it for all of Southeast Asia and Australia. But also at the same time, they're setting up factories in Europe, in places like Turkey and Northern Africa, and then also in places like Brazil and Mexico. They're coming at this from every angle imaginable. And if you're the competition, you've got to admit, it's all a little bit scary. Or maybe just unstoppable.